Hey ladies and gentlemen, and welcome back to another Bitcoin update. We have seen a massive green daily candle, a bullish engulfing candle after a big red candle and a retest of the bottom of the descending wedge formation. We discussed in yesterday's video how Bitcoin was retesting that support zone. We said there was a trade signal lining up. We had this this red channel, descending channel formation forming at the bottom of the wedge. It was not looking particularly good yesterday on the weekly chart. We're below things like the bull market support band, below things like the 200-week SMA, testing things quite, serious things like the Gaussian channel center line. But we ultimately came to the conclusion in the video that Bitcoin was not at all in a bad position because it still had the support that was stemming from a descending channel formation, and it was still maintaining that descending channel formation. Therefore, it was still maintaining the bullish structure. So we drew up this descending channel, in the red here on the 30-minute chart. We drew it up. It is at the bottom of the descending channel. It's the red lines you can see here. We said when this breaks the upside, and we said it would break to the upside, it would be very likely that Bitcoin would pump rapidly because we saw a period of such a strong dump to the downside from the region of around 27,500 all the way down to 25,400 in such a short period of time. I suggested that, hey, we're probably going to see a very quick jump back upwards and a cup formation. That's exactly what we saw. And we actually saw the start of that happening towards the end of yesterday's videos filming. It started to pump when I was actually filming the video. So you would have seen me live kind of making that trade. You would have seen it play out live. So it's great to see that happening. We've come all the way upwards now. We've come just not quite to the top of the wedge again, but very close to the top of the wedge, testing that zone at around 27.5k right now and rejecting slightly. And we're seeing a bit of a red kind of correction here all the way back down to 26.5k. But ultimately right now, even on the 30-minute chart, what we're seeing is a descending wedge formation. And obviously, as you would have known by me talking about it on the daily chart here in yellow, it's the same story on the 30-minute chart. Descending wedge formations are bullish formations. I do expect this structure to break to the upside, and I do expect an eventual retest of the top of the descending wedge formation, the larger one, the yellow one right here. Now, how would you trade this shorter wedge formation? You'd wait for the breakout. Once we get the breakout, you'd enter and you'd take that to the top. Right, so you wouldn't be trading it preemptively. You'd definitely be waiting for the breakout because it might break to the downside. Obviously, there's lots of hot news coming out recently. There's news that, for example, the SEC has kind of told Biden or presented Biden with, I don't know what it is. I guess it's a document of some sort that is kind of, if he authorizes it, it's kind of seizing or at least freezing the assets that Binance has, which means people wouldn't be able to withdraw or sell their coins on Binance potentially, and that's obviously in process right now, so we're waiting on what goes on there, and that might take a few days, it might take a few hours, we don't really know. So the market's still kind of hot there. There is news that's still unresolved, and that might lead to, significant drops to significant pumps, but overall, if we're speaking from a TA perspective, it should realistically break to the upside. We should realistically see a retest of the top of the wedge, and who's to say whether that will break the wedge or not. I believe eventually this wedge will break to the upside. I suppose what you can ask yourself is, a lot of people are asking me specifically, Wolf, why are we pumping here? Why are we bouncing so strongly? Isn't this bad news? Isn't what happened recently is bad news? And obviously it's not good news. The SEC, determining that a lot of coins are securities, and the SEC, suing Binance and suing CZ is not obviously good news. But the point is, guys, it doesn't matter what you think the news. It doesn't matter if you think the news is bad or not, or good or not. The point is, the market hasn't reacted very much to it. We see the balance on exchanges, the balance on Binance, Bitcoin balance on Binance actually increase. Okay, we saw a very, very, very small drop in the balance of Bitcoin on Binance, a 1% drop, less than 1%. This means that people who have their assets on Binance are not reacting to the news. You can see how small that is. That deviation is very, very small. Just resetting it to where it was 5 or 6 days ago. So the fact that people aren't rushing their coins off the exchange probably demonstrates the fact that people aren't actually worried, regardless of whether you think the news is bad or not. People aren't worried. There's no reaction from people on Binance. People aren't overly scared. There's no real reaction for the market. And so since there's no reaction for what's actually happening on Binance here, there's no reason for the price to go down. There's no reason for the fair valuation of Bitcoin to decrease, and hence the price jumped down quickly. There was no reaction from Binance users, and hence it jumped back upwards. It makes perfect sense. And we're seeing, of course, at the same time, market depth return to kind of normal levels, almost normal levels on Coinbase and on Binance. It's approaching normal levels. So, really, there's been no fundamental reaction from Binance or Coinbase, operations are continuing as usual. Coinbase is the same story. Users aren't reacting, and so there's no real reason at all for the price to drop. The only reason it dropped originally was based on just pure fear, and it pumped back up again because people realized that fear wasn't substantiated. There was no changes to the fundamentals, so it makes perfect sense for it to be going back upwards and resetting to where it was, basically in the same kind of range it was in before. And now we're seeing a descending wedge, and provided there's no further fundamental developments, we should be seeing a break to the top of the wedge. The great news is, during this period of time, Bitcoin has also regained the 200-week SMA, which was previously below. It's also regained the bull market support band, which was previously below. A lot of people were making YouTube videos saying, oh, guys, Bitcoin's lost the 200-week SMA. Guys, Bitcoin's lost the bull market support band. I came there yesterday. I gave you logical analysis. I said the fact that, hey, look, this could very well be a fake out. And it was a fake out. It has been a fake out. In fact, it's been a very bullish fake out because we've come down. And during that period of time when we lost those things temporarily, we actually retest the bottom of the wedge. And we also retest the top of the green support box, horizontal support box, standing at 25.2k. So not only did we see a bullish retest of the wedge, we also saw a bullish retest of a very major support level, dipped in there for liquidity and came back upwards quite strongly. So in fact, this was actually bullish if anything, and we're still in the same structure. You guys know everything about the structure by now. It's a bullish structure. Yes, it is a downwards trend. Yes, we are in a local downwards trend. Since around March, but the point is you could have a downwards trend and you could be bullish in a downwards trend. That's exactly what a descending wedge is. Descending wedge, you see a downwards trend, you see lower highs, lower lows, right? But it's still bullish. It still breaks the upside roughly 70 to 75% of the time. So I'm actually still bullish on Bitcoin, both on a daily chart. I'm still bullish Bitcoin on the weekly chart. The only chart that I am slightly concerned about on Bitcoin, as I've made it known before on multiple kind of videos, is the monthly chart. The monthly chart's kind of the only bad chart on Bitcoin right now. And even then on the monthly chart, again, 50-month SMA, which is the 200-week SMA, is being retested right now quite strongly. We've bounced off of that. But, the one thing we are concerned about on the monthly chart here is the 21 EMA. We have lost that in the last monthly candle. We also saw a bearish monthly engulfing candle. We also saw a rejection from the red resistance line at around 29k. So the monthly chart, I'd be lying to you if I said it looked good. We have got strong resistance here coming up with the 21 EMA at 27.7k. The monthly chart's probably the only chart I'm actually concerned about for Bitcoin. The other charts look good, and that's including charts like the total cryptocurrency market cap, which is in the same descending wedge that Bitcoin is in. This is the total cryptocurrency market cap chart, which measures the total cash amount of every single cryptocurrency in one chart. Same descending wedge as Bitcoin, which means Bitcoin is leading the market, and the fact that Bitcoin's in a descending wedge means that the market's basically in a descending wedge, and that's good for both of them. And we've also got, things like the S&P 500, which I don't talk about particularly often, but I do bring it up occasionally. Breaking out of a long-term ascending wedge formation, which is a bearish formation, broke that to the upside, which is good for everything. And that was unexpected, and people weren't expecting that. We haven't seen a drop in the S&P that people have been expecting. In fact, we've been bottomed out for over 8 months now, so it's good news. And we've broken above an ascending wedge formation. And we've also got, the bond yield chart layered with the S&P 500 chart in orange here, showing us that, generally speaking, right, the S&P 500 kind of follows where bond yields are going. So if bond yields go up, S&P goes up, bond yields go down, S&P goes down. We've seen this happen on 2 occasions in the past. Now, it's not an overly accurate trend, but what we're seeing now is a deviation. We're seeing now that the S&P 500 actually started going downwards in December 2021. That is when bonds actually started going upwards. And this indicates to us, guys, on top of the fact, okay, that for the first time ever in the S&P 500's price history, the Federal Reserve is raising rates during a correction on the S&P, okay? It indicates that we're not seeing what usually happens. And so this could be reason to believe that people expecting what usually happens to happen, that being a descending structure on the S&P, that being new lows in the S&P, might be wrong, right? The trends we have do suggest that the S&P should go down. But the point is, the fundamental characteristics of this, pending recession, or whatever you want to call it, the fact that the fundamental characteristics of the last 2 years are entirely different to the characteristics of every other point in the trend that people are pointing to. And so we don't actually know for a fact at all what the S&P 500 is going to do. We don't, because we don't have the historical data. It's not the same as what it was in the past. And I'm not talking about, times are different. I'm talking about, fundamentally speaking, rates are not doing the same thing as what they did in the past. Therefore, you can't be sure. Rates drive the macroeconomy. Interest rates are everything, right? If they're doing something different to every other data point we have, we can't be sure what's going to happen. So everyone who's saying that the S&P 500 is certain to go down, certain, NASDAQ certain to go to new lows, no, it's not. It's not certain. Is it likely? I guess so, but it's not certain at all, and it's not actually a reliable thing to say. It's completely speculative. Yes, there are historical trends that exist, but we're acting differently. We've never, ever before in the entire history of the S&P 500 ever raised rates in a period of downwards price action. It hasn't happened. So why are we assuming that the same thing is going to happen as last time when the whole fundamental characteristic is different? That's what I'm saying about the S&P and the traditional markets right now, and that's why I don't rely on traditional markets to make my arguments about Bitcoin, especially considering that as of right now and ever since March, Bitcoin has not been correlated to traditional markets. That's a fact. It has not been correlated on a 30-day moving average to traditional markets since March. So, and actually been descending since August. So, let's not base our arguments about Bitcoin and the S&P and the NASDAQ and the traditional markets. I don't like when people do that. I don't think it's substantiated by the facts and realities. I think the only thing that's really reliable for Bitcoin at all, really, is the 4-year cycle. And the 4-year cycle is very clear about what we should be expecting. And let me go bring it up right now. Look, you guys have probably heard about this hundreds of times by now, but I want to say, if you're new to the channel, this is something that I talk about probably more than a lot of YouTubers. I'm a very big believer in the 4-year cycle. I've been a believer in the 4-year cycle since, when I started out in crypto. It made me predict the top in 2021 within 10%, made me predict the bottom in 2022 within 5%. So the fact of the matter, within probably 7% actually. The fact of the matter is, the 4-year cycle is extremely accurate, and at this point in time, we've got no reason to believe it's going to be anything but accurate. And so that's what I'm relying on. I'm not relying on speculative, speculation and estimations about traditional markets dragging down Bitcoin when the correlation doesn't even exist at this point in time, and it's fundamentally different to previous corrections. It's just very, very, very speculative. It's very wishy-washy. When the evidence comes back and it compiles again, and when the correlation returns, if it does, that's when you start believing in something like that. Until then, you trust the existing trends that are actually valid. And that's what I'm trusting here. So, what do I believe about Bitcoin fundamentally? What is the point of this video? The point of this video is really to tell you that the descending wedge is in shape. It's doing well. The drop that happened 48 hours ago was just a scare. It's a scare, and there certainly is risk for more fundamental events to occur that could drag the price action down. But ultimately, we've seen a strong recovery because the fear wasn't substantiated by the realities of the situation on the actual exchanges that were being affected. We've also got, guys, CPI and inflation, CPI and FOMC on the 13th. So in about 7 days, CPI and FOMC happening around the same time. That will lead to a dramatic amount of volatility. And if we haven't broken out of the wedge by then, that is the period of time we will break out of the wedge, in my opinion. Whether it be upside or downside, we will leave this wedge. I personally believe it will be an upside break. But, there is arguments to be made that we go for a downside break. There is arguments to be made we go lower. And by lower, I don't mean below 15K. I mean, looking at 20K region, 18K region, something like that. But personally, I just think we'll probably go upwards. Look, we'll have to wait and see. As I said, my macro arguments are based on the 4-year cycle, and the 4-year cycle doesn't really have any particular guidelines other than don't go to 15K. So realistically, we could do anything. But given the fact that it is a descending wedge formation, that's a bullish formation, and so I'd be forced to assume, because I do trust charts, and if I trusted charts, I'd be forced to assume that would likely break to the upside. So let's wait and see. No point talking about that now. It's probably not going to happen soon. Look, I could be wrong, especially with the fundamental events forming, with Biden receiving that document there or whatever it is. But the point is, FOMC and CPI in 7 days, that's when the major volatility is going to be. If my best guess had to be put in, I would say that's when the movement really is going to start to happen. So thank you guys for watching. Please check out the VIP group. It's on Telegram. We post altcoin trading signals, very profitable stuff. We've released all of our trading results. Every single win, every single loss for the last 6 months has been released. You can find it in the Telegram group in the description below, as well as the information of how to join the group. Very good group, very profitable. Join up if you're interested. Bitget Exchange, okay? If you deposit, we've got an exclusive promotion with Bitget Exchange right now. Deposit bonus, okay? 10% bonus on any deposit you make up to 1,000 USD. Therefore, if you put a 1,000 USD deposit, you get 100 USD in cash back bonus. You also get a 15% trading fee discount for life for signing up using my referral link, as well as a 4,000 USD reward center access for completing tasks. You can gain some rewards there. It's 5 times the lower fees than Binance. It's non-KYC. It's got a protection fund. It's released their reserves information. Everything you need on an exchange, especially in the period of time in which we're seeing exchange uncertainty, is on Bitget. Sign up using my referral link. Don't miss out on this exchange. We've also got Crypto Academy, become a trader, 10-unit course. If you want to learn how to trade, guys, this is the place you can do it. Now, you can learn to trade many ways, YouTube, websites, books, whatever. This is another way you can do it. A structured course from Unit 1 to Unit 10, teaching you everything you need to know about how to trade, how to identify market patterns, how to identify indicators, how to use them, candlestick formations, market psychology, everything. It's all on the website, and it's all, if you chuck us an email at cryptoacademycourse@gmail.com, all the information will be sent to you about how to pay for the course and what it actually looks like with a visual walk down, a visual walkthrough, so you can make an informed decision with all the information available. Thank you guys for watching the video. I hope you enjoyed it, and I'll catch you in the next one.